Misha, welcome to Growth Without Referrals. I'm really looking forward to this conversation. You've spent your career working at the intersection of deep tech, capital, and growth at some pretty critical inflection points for companies. Before we dive in, for the audience, can you give a quick overview of your background and how you end up doing what you're doing today?
Mark, thank you much for invitation and opportunity to speak to your audience. I really appreciate the opportunity. My career spanned investment banking and consulting from an industry perspective, but ultimately what I do is to really help companies to grow. By doing that, I walk through many halls of different companies, work with companies in large and small settings, and looking forward to discussion. But ultimately, what you would want to know about me is that I can come in and help you with the growth and find the kind of that magic bullet which helps you to kind of make your company successful.
Perfect. And Misha, you've worked across scaling companies and deep tech infrastructure. What patterns have you seen in companies that successfully scale versus those that struggle?
It's a very deep question. I think we better all kind of break it in a couple of things, right? And the way I'm thinking about the growth is you can think about organic, inorganic growth, M&A driven growth, specifically with companies that already have some dynamic and some commercial traction. But if you're thinking about very generic terms about a new company, they start typically with a founder who is growing the company on a passion and an innovation and friends and family and whatnot. So you're trying to grow the company out of nothing, right? It's obviously the riskiest part of the business. It's the hardest. And people who succeed there, they can get to the next stage, right? The next stage is you have to figure out how to translate your passion in innovation into what can be repeatable. Right? How do you build your go-to-market machine? How do you figure out who your ideal customer actually is? And how are you going to get to them? Because presumably you're not the only one selling the best thing in the world. And once you reach a plateau in that growth and trying to grow your niche, you need to think about what's around the corner, what other opportunities exist, and how can you take care of them by either extending your company, extending your brand, or potentially buying a company in that particular space that gives you a beachhead.
Okay. And one thing you said in our pre-call that really stuck with me, you framed growth as organic versus inorganic. Can you break that down for us?
It's a very important distinction. Right? The organic growth would be something the company gets organically, right? You ultimately get customers refer other customers, you rev up your marketing engine, you get more referrals, and you grow because you're doing a really good job. Think about, Facebook, or think about OpenAI. I mean, it seems to be they grow like magic, right? Nothing happens and they keep growing and growing and growing, right? But once you reach a particular point, right? Once you reach saturation of your market, you have to think about other opportunities to serve your customers, because your customers buy one product from you, but it's not the only thing they need. Right? There are products which they can buy from you as well, but you don't currently provide. And that's where M&A growth comes in, right? The easiest thing to think about it, again, Facebook is buying like a WhatsApp, right? You're already on a web, you're already talking to your friends. Why don't you have a messaging platform to do it? Or buy an Instagram. Again, why don't you just look at a different type of information online, right? So that seems to be very close connected product set. And that's pretty important, right? Sometimes company in a more standard industry, they integrate vertically, right? If thinking about a value chain, okay, you think about oil companies, like they have like they pump the oil out of the ground, then they deliver it to a refinery, then they refine it to a particular product, they sell it as a gasoline, right? That's a perfectly integrated value chain strategy, but it hasn't been like that before. People had to build it and buy different parts of the value chain. So pretty large strategic problem for them to solve.
And Misha, how should founders or leaders think about organic growth in the early stages?
I think it's a very important part of growth, right? You have to decide, obviously, once you start a company, if you're typically in a B2C and a B2B environment, right? In the B2B environment, it takes more effort and the revenues are spiky and you really depend on one big customer, right? Because it really drives what your success is. But for B2C, you also need to figure out what your customers need and how to get to them, right? Because it's a highly saturated market. Innovation are very easy to copy. And you have to be really on your toes all the time, trying to figure out what customer needs, what price points they want to buy at, and how you actually make them better off with your product than without, or worse off with the product that your competition does, right? And you normally start small. You normally start with a thing which solves one problem for one particular type of a customer, and then you scale up from there.
Okay. And when you move into more structured growth, what changes?
The change is very dramatic, and most founders miss it, right? Because it's very often to think about yourself as a founder as basically a magic that makes the whole company work, right? At some point, you need to let go and find a sales team, a marketing team, a finance team, a supply chain team. You actually need to go from a embryonic company, which fully depended on a founder, to a more standard corporate structure where you know how to scale. Because a founder at the end of the day is one person, right? You cannot scale one person beyond a particular point. You have to be able to grow sales team and add up sales capacity and have more leads and referrals. And therefore, that's how the company grow faster, right? One person cannot grow it beyond a particular point. And that's a point where most founders miss, right? They stay with the sales and with the marketing, with the promoting their company way too long. And in a sense, they choke the growth, right? Because they want to be in every single sales conversation, in every single sales close. And that ultimately slows down sales at some point.
Absolutely. And what I think I'm hearing, Misha, is the founder can be a bottleneck.
That's correct.
Bottleneck to growth. And Misha, thank you for mentioning there's a distinction between B2B and B2C growth. And you said something, and I wanted to unpack it a little, but why is B2B growth so spiky?
If you're thinking about, let's start with a simple one. Let's start with the B2C, right? We all had lemonade stand, right? My lemonade stand, I sell one lemonade to one person for $1 or for 1 quarter, whatever the price is, and that's 1-to-1, right? And the more people come, the more lemonade I sell. Now, think about if you want to sell that lemonade to a company, right? Well, they want to know how good your lemonade is, how consistent your lemonade production is, how much lemonade you can produce, how reliable you are as a producer. Can you deliver it to them? Can you give a discount? Can you pay enough up? So it becomes a much harder problem immediately, right? And I think same thing happens especially with technology, because if as a customer, want to buy a technology of a new company which didn't sell to anybody, I'm taking an enormous risk that company develop a bad product which is full of cybersecurity risks, which will not survive, and I'm stuck with something which nobody can support, right? And that particular risk makes it very, very difficult for a company to engage and buy. And therefore, most of the founders, especially technology industry, they need to work extra hard. They need to prove, they need to do a free pilot, they need to do a testing, they need to do all arduous terms for a deal just to get that reference customer, the first few reference customers that they could say, yes, I bought it, I like it, it's working as expected, and it does benefit me as a company. And with a B2B, you also need to be solving a very specific problem, right? You need to know exactly how the company operates, and you need to address that particular problem. And that's what typically is difficult to do. The other aspect of that is that in our example of a lemonade stand, like it's one lemonade, $1, two lemonade, $2. It's very simple to see how it goes. But with a B2B, you have to wait a month or 2 months or 6 months before you can see your revenues, your first revenues from a commercial customer. And therefore, what I observed is that typically companies in a B2B space have a much better product than companies in B2C relative to the stage, meaning that B2B companies have to work much harder to be able to convince their potential clients to buy their product and make sure that their product will satisfy their needs for the future dynamic of a market.
Okay. A lot of leaders listening are in that phase where they have a great product. The growth isn't predictable yet. What are the most common mistakes you see companies make when trying to scale beyond referrals?
I think it's a fundamental question, right? And a lot of that is art versus science. But if you're thinking about what works, what makes your probability of success high is basically a few things which you need to be remember. One is that when you're a new company and you get a big order, it's very easy to get skewed towards that particular customer needs, right? You got an order, you decided to support that particular customer and grow into that direction. The problem is that maybe it's a wrong direction for your company. So what you need to be very precise about is you need to know what your ideal customer is, who you're going to please going forward with your product. And you have to stay true to yourself in that particular regard. You need to be really, really focused on what actually makes your product different, what creates your moat. And you have to be very jealous of anything which kind of puts you in a wrong direction. So you have to really focus on what you're trying to solve for and really deliver, right? And once you have that trust of a customer, it's much easier to expand, but you have to start with very, very strong moat and go from there. Think about iPhone, right? It solved one problem and then we kind of added up millions and millions of applications. But they didn't start with millions of applications, right? They started with what you wanted to do first. You wanted to take a phone, take a call. You want to take a picture. You wanted to do very, very basic things, right? And then it expanded from there. Many customers feel a pull of a customer or a noise or whatever. I guess to make it simpler to understand, what I would like to founders to remember is at the very beginning, you have to separate the noise from the strategy, right?
Hmm.
Many people tell you many things and tell you what to do. You have to know exactly why a company exists, what makes you unique, and how to defend your moat. That's the starting point, and you can go from there.
Okay. That's great advice. And what's something that sounds right in theory, but doesn't work in practice?
Well, multiple things, but I think one thing that what sounds good in theory is, and I've seen it multiple times, why don't we just send 1 million emails and see what happens? Why don't we hire 15 salespeople to cover the whole United States and see what happens? I think those are very costly mistakes. Right? They're costly in terms of money, in terms of reputation, in terms of success, in terms of time you lose. I think you have to build up your bridge as you kind of trying to cross the river, of course, but you ultimately need to follow the success, right? You need to find a customer, build around it, and then expand to another customer, right? For a new founder, it's the easiest way to grow and not to chase ghosts, right? Or marketing dreams or respond to every single email promising bunch of referrals. It doesn't happen that way. You have to earn it.
Okay. So, Misha, if you were advising a founder today who's relying heavily on referrals, what's the first step to building a more scalable growth engine?
You have to basically start building a company, right? You have to figure out how to build a company that can exist without you as a founder, right? How to take yourself out of a picture by also incorporating everything that you know so well into the business you're trying to create, right? And you have to know your customer. You have to understand how to get to your customer. And you have to find customers outside of your immediate circle of referrals, right? So you basically have to say, my customer has those characteristics. How do I find people who are like that outside? And once you understand that, you need to figure out, how do I get to them? Is it through emails, marketing? How do I get leads? And how do I close the deals by adding up salespeople? And that's a pretty important part of equation. How to build a go-to-market strategy, which not only create noise, but creates actionable leads and allows your salespeople to close them, right? That's probably the hardest part. And once you do that, right, let's say you're a business which has a supply chain, you need to figure out how to make sure your operation can support the growth. You have to make sure that your finance can forecast growth and allow for cash flow to support it, right? That's becomes secondary from a back office perspective. But I think ultimately you need to understand how to find your customer, right? How to look at your referral business, understand which people buy the most and more likely to be happy, successful customers for you for a long term, and how to replicate them from a universe of customers which you never talked to before.
Okay. And founders on the other side who rely heavily on referrals, what should they stop doing to build a more scalable growth engine?
So you have to stop being a bottleneck, right? Trying to figure out how to not to be a bottleneck, how allow people to be smarter, better, more successful in them they are in whatever they do, right? As long as you deliver on the promise of innovation and passion for the building of a company, you have to start trusting your team to deliver what they do best. Sales, marketing, finance, supply chain, operations, customer support, whatever it is, but you have to trust them to do it. And I think most founders find it very difficult to let go because, I mean, by nature, they build a company from ground up where controlled everything. And that's a psychological question as much as an operational question, right? So whatever works for you as a founder to do, you should do, right? If you need to talk to a voodoo guy or a psychiatrist or to fellow CEO guys, you have to talk about them that point where you need to let people let go and fail on their own and help them to succeed, right? That's the hardest part psychologically. And it's very hard to be specific here because it's always very different for every single company and every single founder.
Okay. Misha, this has been incredibly insightful. And if someone wants to learn about you or follow your work, what's the best place for them to go?
Easiest way to find me would be through LinkedIn. I'm very open to connection. Feel free to find me. We can put my email in a part of a description of that particular podcast. And feel free to reach out with any question about capital, strategy, or growth. And then we can talk about to see where you are in the trajectory and how I can help or whether I can refer you to somebody who can do a better job.
Excellent. Misha, I appreciate you coming on. This has been a great conversation.
Thank you very much, Mark. Pleasure.